Hi, welcome to VCC TV. Today we have with us Mr. Gaurav Hinduja of Capital Flow to discuss more about digital SME lending and the growth plans ahead for the company. Welcome to the show.
Thank you so much. Thank you.
Digital SME lending has been one of the hottest commodities in the past 2-3 years.
Sure.
Right, and the need for financing has gone up because new startups have come up. How has the sector changed?
So I think what we've seen is the evolution of a lot of digital ecosystems such as e-commerce, such as say cabs, right? Thanks to Ola's and the Flipkarts and Snapdeals, and even in the travel aggregation space, a lot of startups are coming that have SMEs at their core, right? Whether it's a cab driver, whether it's an e-commerce merchant or a small hotel. Now what has happened is these SMEs that are at the core of these businesses are also very small companies, typically new to credit, typically don't have access to bank financing, right? And the only way these large platforms grow is if their SMEs grow, and that's why Capital Flow is trying to play a role to try to use data, try and use new models of underwriting to actually bring them into the formal ecosystem with formal channels of financing. So over the next 3 to 5 years, you will see a lot more of these ecosystems develop, and as a result of which a lot of SMEs coming into the limelight.
You focused primarily on e-commerce merchants, manufacturing companies.
Yeah.
Okay, what will be the next area of your focus?
So like I said, other ecosystems like travel and hospitality, there is going to be buyer to buyer sort of e-commerce marketplaces. There is going to be some more interesting ones that I won't reveal now, but at some point later we will. It's definitely going to be something that Capital Flow will focus on. Right?
Okay.
So think more digital ecosystems within the startup community.
Now moving on to that B2B thing that we're talking
Yeah.
about, we've seen enterprises enter B2C and they've been
Yeah.
quite successful.
Yeah.
How do you see the B2B sector at this point of time, and what can we see going forward 2-3 years?
I think you'll definitely see a very high growth in the entire B2B space, right? Because ultimately that's the main driver of the economy as well, both from a GDP perspective but also from an employment perspective, right? And as you see a lot of VC investments coming into this space, you will see a tremendous high growth over the next 5 years, and obviously thanks to Mr. Modi's push in terms of Make in India and a lot of the right signals that he's sending, like I said, a lot of them will come into the formal limelight and they will ultimately grow.
Coming to Mr. Modi's push,
Yeah.
how contented are you with the government's efforts, and what more could they have done?
Sure. So I mean, so far he's made all the right noises, said all the right signals. Have they happened at the ground level yet? It, I think, is yet to be implemented. But we are very optimistic that the next 3 to 5 years with Mr. Modi at the center, and obviously with Mr. Raghuram Rajan at the RBI, the forces are aligned to take India in the right direction, especially from an SME perspective.
Okay, e-commerce has emerged as one of the hottest commodities again.
Sure.
Right. How do you see the sector shaping from now? Is there more competition left within the space?
I think the growth rates that we've seen in e-commerce with the large e-commerce players, the same growth rates will not continue over the next 12 to 18, 24 months. While they will continue to grow, I think the amount of burn, the amount of marketing dollars that they're currently spending will at some point obviously have to come into a more level playing field. So they will grow, but not at the rates that we've obviously seen them over the last 3 to 5 years.
What about new entrants? Are we going to see new entrants in
I
the
think
sector?
in pure play e-commerce, I think it's a little too late for entrance when you've got large funded companies like Flipkart, Snapdeal and Paytm. So you may see in online food delivery like we are seeing, you may see in hyper-local delivery, there you'll definitely see a whole wave of startups. But in pure play B2C e-commerce, I think you won't see too many new entrants.
Moving to the manufacturing question, manufacturing hasn't picked up as expected. Sure. And Make in India, even though it has done a bit,
Yeah.
it hasn't done that good. So what can we see, what trends can we see in manufacturing?
I think it's still early days for Make in India to work. What we will see is you will see certain sectors, for example, let's take apparel and textile, that for the last 3 to 5 years was going through a bad phase. Now thanks to Make in India, thanks to the devaluation of the rupee, you're going to see a lot of flow from China actually moving into India, because India is still relatively cheaper than China. While we will start competing with folks like Bangladesh, I think you'll see a lot of manufacturing activity that is currently city based moving into more tier 2 and tier 3 towns.
Does big banks like SBI entering into the financing for startup space hurt the businesses like Capital Flow?
Actually, we see them complementary, right? They help to build out the entire ecosystem. So at some point, there is potential partnerships that folks like SBI and Capital Flow can actually enter to actually serve the system better, right? SBI obviously has been great. They're a large institution, been around for several decades. There's a lot that we can learn from them in terms of underwriting and operations. But we bring the DNA of a tech company and I think the fusion of the two will actually help open out potential partnerships and actually improve the funding ecosystem for startups and SMEs.
With new players coming into the funding space and the government allowing AIFs to foreign funds to invest in AIFs, will the competition become more cutthroat, leading to higher valuations for companies?
So the space will definitely become more competitive, but just being in a regulated space, you're not going to see a huge wave of startups like we've seen in e-commerce or hyper-local delivery. I think that's one of the advantages of being in a regulated space. So you will have to get an NBFC to be able to lend to this sector, which is the right model to take, and thereby that process is not easy. Thereby there's number of startups that come will obviously be far less, but you will start to see more competition from incumbent players.
Okay, that's about it. Thank you. Thanks for
Pleasure.
your time.
Thanks so much.